Stocks are crashing to levels we haven't seen in literally since yesterday. Literally since yesterday, we have not seen stocks at this level. And in fact, we're opening this morning down about 42 basis points on the market. Not a whole lot's going on. In fact, if we jump into the S&P 500 map, I mean, really the only thing that, I mean, is pretty flat all across the board, except for some of these big names like Micron, like Qualcomm, like Oracle. Some of these big names that have put in big moves lately are pulling back just a little bit, but let's look at Nasdaq here. This is going to be more impacted by those big tech names than the market is. But listen, it's gone up how much in the last few days, right? In the last 40 days, the Nasdaq index has gone up 27% since that bottom right there. So definitely one of those outsized moves that not everybody's prepared for, right? I hope that you were able to take advantage of this. But don't try and short a bull market, right? Anytime you see all-time highs, that's bullish AF, and you don't want to short this. However, we need to take a look at RSP, equal weighting, because we have a totally different story when we look at RSP. In fact, let's go side by side with RSP on the left and SPY on the right. So what is RSP? RSP is equal weighted S&P 500 index, where the SPY is market cap weighted S&P 500. So from this peak right here, February 12th, we have not hit new all-time highs on RSP. In fact, it's getting worse. It's getting worse. As of right now, we're seeing less and less stocks overall that are pushing up higher, whereas this right here shows huge concentration in these big names. That's exactly what you're seeing, is that the big market move. In fact, if I push this out to 1 month performance, what really happened? Huge moves in the big names, and not really a whole lot everywhere else. Huge moves in the big names, but not really everywhere else. So what does that mean? Let's drop this into a RSP divided by SPY. And I got some notes on here for you so we know how to read it, right? SPY is, or I'm sorry, this chart right here, RSP divided by SPY, is falling while the SPY rises. What we're seeing lately is narrow leadership. You've got to be selective and have extra caution. Okay. This is exactly what we're seeing. Now, we're running into this order block down here. I don't know if on RSP that's going to provide support, RSP divided by SPY. I wouldn't think it is. But today with the pullback on SPY, we're now down 55 basis points, falling while SPY falls. Broad weakness, risk off, defensive posture. So I'm not saying that there is a crash coming, but I am saying be defensive, have a lot of caution here, and it definitely shows up. Now, VIX, what's going on with VIX? And you can see the VIX, the volatility index, hit a bottom, hit a floor around 16 or so, and now it's pushing up. In fact, it's up higher than yesterday. VIX is up about 3% right now over its 20-period moving average. So the volatility is coming back into the markets. Now, let's jump into PCC, which is the put-call ratio, and let's take a look at this. I added some lines on here so we can see a little bit easier what we're looking at here. Now, huge change in direction. Enormous change in direction. Anytime you see the put-call ratio reach these extremes like this, don't be surprised if the market starts to go the other direction, right? In fact, we got a low reading of here of 0.628. So we were almost at excessive call buying. This morning, we're looking at 0.9, which is going to put us at roughly balanced at 0.9, almost there. Still have bullish sentiment overall, but certainly changing direction. So we'll see if this holds by the end of the day, if we're getting more puts being bought than the calls. Let's go to MMFI. MMFI is a number of stocks that are above their own 50-day moving average. How many stocks are trending up? Now, as of this morning, what we can see is it is still trending up overall, but it's pulling back today. We're down at 59% of the stocks that are above their own 50-day moving average. So still more than half the market, but it is starting to wane just a little bit. How about the number of stocks above their own 200-day moving average? So longer term reading on there, we can see this is pushing down at 54%. Let's take a look at bonds. Both the 2 and 10-year are up this morning with looks like new highs right here. Now, this is really interesting, right? Because as rates are rising, here is putting more pressure on the Fed for inflation. Okay, more pressure on the Fed when this particular one, the 2-year, is rising. The markets are going to expect the Fed to stay tighter for longer. And in fact, if we go into the CME Fed Watch tool, that's exactly what we see. This has changed a lot since yesterday. Just in one day, we're seeing some huge changes. So this is by through the rest of the year. We only see a 53% chance that rates will be unchanged. and basically everything to the upside with, I mean, a 2% chance to downside, basically everything to the upside. Now, that's not good for the consumer, right? We're looking at higher rates on higher prices. That's not looking great. In fact, I bet if we go look at the yield curve, we might see something crazy here in just a minute, which we're going to get to. But new pushing up higher on the 10-year as well. Now, anytime that this is rising, remember that institutions like to use the 10-year as their default rate, right? If they're going to invest in something, they're going to compare this to the 10-year, and they're going to say, okay, I don't want to make this this mortgage, or I don't want to make this investment. Whereas I can just go put it at risk-free yields for even more than I did yesterday. Or even more than I did yesterday. So this is going to put pressure on stocks, right? You're going to have less investors looking at stocks whenever the longer term yields are starting to go up higher. In fact, let's look at this. The 210 spread. Yesterday I was calling it split, and I was like, I was driving around and I was like, I know that is not the right word for this. So I did consulting with financial institutions for a dozen years, and these are the type of things that I would share with them. But we are moving in the direction towards recessionary pressure right here. So this is a 47 basis point spread right now. And what that looks like is here between the 2-year, which is, where's the 2-year point? 2-year point's right here, and the 10-year point, which is right here. This gap is getting closer. This gap is getting closer right now between the 2 and the 10. Anytime it inverts where the 2 is higher than the 10, that generally signals that a recession is on the horizon if it hasn't started already. Now, let's go talk about the dollar index, right? It's rising today. Rising stronger dollar is going to put pressure on commodities. So we may see gold and silver and oil and copper being hit because of this, right? So in fact, let's jump over to take a look at those guys right there. Let's look at gold first. Gold is feeling the pressure of that order block, that overhead resistance right on top of it. Tell me order blocks don't work, right? The first 2 candles that have come up to this have rejected it so far. So gold really not seeing the strength that we saw yesterday in silver. Again, tell me order blocks don't work, because you can see sellers are coming in to sell silver right at this $86 level or so. So just be aware of that if you're long silver. Let's go to copper. Copper is pushing to new all-time highs. Now, copper is really useful for a lot of different things, but this is also somewhat inflationary because copper is really useful in a lot of different things. And so they're going to be buying more copper to put in all of your electronics and things like that. So it's going to be pushing a little bit of inflationary pressure there. And speaking of inflationary pressure, that's exactly what we can see with oil. And this morning, oil is up nearly 4% right now. And the market is still unsure about this whole Iran thing, right? I mean, yesterday, Trump was saying how they sent him a proposal, and he said, this proposal is on life support. I don't like it whatsoever. It's the worst proposal I've ever seen ever. I don't know. But what I do know is that oil is pushing up higher today. Let's take a look at the risk-on sectors. So the risk-on sectors are going to be things like the tech sector, which has been on an absolute run lately, but is starting to pull back ever so slightly. Then you've got the communication sector. Now, this is going to have things like Netflix and Meta and Google in it, which is also feeling some pressure and starting to push down. In fact, this may be in a bearish trend in a minute. Then you've got the discretionary sector. This is your Amazons, your Teslas, your Fords. That's feeling a little bit of pressure as well. And then lastly, the financial sector. So I am seeing some sector rotation is what I'm telling you right now. The big moves on the risk on sectors are starting to rotate. Money's starting to come out of those. Let's go look at the risk off sectors. And let's see, oil, XLE is pushing up higher, but we don't really see the move yet into utilities and staples. These are the defensive plays, and we don't quite see those moves just yet. And then lastly, you can see these defensive sectors compared to the SPY. The rotation hasn't moved into these just yet. But that's all right. Let's take a look at the earnings calendars, right? So we've got lots of earnings still coming out this week. Be sure if you are trading any of these stocks that you are aware of the earnings that are coming out. And listen, I don't trade through earnings because it's elevated risk. You do you, but just know that these are coming out ahead of time. Could be great, also could be destructive. Let's go look at a few posts I found interesting. 6 of the last all-time highs in the S&P have been on negative breadth. Interesting, right? This is the advanced decline line. And in fact, I have that chart. Give me just a second here. We'll explore it just a little bit more. So this is that's not the SPY. This is the SPY. And down here, I have the advanced decline line. Give me 2 seconds to pull it up here. Boom. There's your advanced decline line. Okay. So what they're saying on this post here, 6 of the last all-time highs have been on negative breadth. Now, this is somewhat subjective, right? I wouldn't read too much into this because advanced decline is like on a single day. Okay. Advanced decline is like in a single day. And as you can see, right, it has been pretty flat up here. Right? We haven't had these big moves up. So don't look at this as the most bearish thing ever, because we are looking at a lot more areas of breadth, like the MMFI and the MMTH. Both of those are showing you the percent of stocks above their own moving averages. And then we can jump into the outlier breadth right here, and we're seeing less buy signals, more sell signals. This has bearish crossover as of April 23rd. And we're also seeing less uptrends and more downtrends. So all that's working together. So just be aware of that. We don't really have the amount of breadth thrust that we had a few weeks ago to push the market up higher. After another day like yesterday, where the index closed higher on negative breadth, there are now fewer than half the stocks in the S&P 500 above their own 50-day moving average. Wait a minute. Are you sure about that? Let's go back to MMFI real quick. Because it's currently sitting at 59. I don't know where they're getting their data from, but the MMFI is exactly measuring the percent of stocks above their own 50-day. It literally is percent of stocks above their own 50-day average. It's at 59% right now. So there's definitely a lot of fear mongering going on out there. I have no idea where they're getting this from, because this data and my data are totally different. So just be aware, know what you're looking at. Hedge Eye is putting out that Main Street consumer sentiment is hitting new all-time lows. And I find this really interesting. I find this super interesting, because the market is absolutely ripping higher, but yet consumer sentiment is pushing new lows. Right now, why is that so interesting to me? You remember back in 2008, 2009, right? I had just graduated from college with my MBA, and I was trying to find a job, and it sucked. Right. So if you're in the job market right now, maybe it's the same for you. Maybe the job market is not great at all, and that's helping push consumer sentiment down. But it's really interesting, this divergence here between Wall Street and consumer sentiment. And then lastly here, Europe is running out of jet fuel. So yeah, if you haven't already booked your summer vacations, now might be a good time to at least buy your summer vacations before the price of crude goes absolutely insane, because we are running out of it in Europe, apparently. A couple news headlines for the day. Tesla announces a $250 million investment in the Berlin battery plant factory. Nelson Peltz plans to privatize Wendy stock, and it jumped 17%. Under Armour reports losses due to declined revenue. eBay turns down GameStop's bid. How about that? Amazon launches 30-minute deliveries. That's pretty sick. I'll be glad for that. And Nvidia stock drops as CEO Jensen Huang excluded from Trump's China trip. I don't like you, Jensen, in your stupid leather jacket. I'm not going to invite you to my trip. But listen, we already talked about breadth over here. Let's go look at the S&P 500. Still has that buy signal, and is still pushing up higher, cruising up higher. But again, a lot of cracks are happening under the surface. In fact, of the constituents in the S&P 500, it's getting more fearful across the board. So this is the number of stocks with greed and fear, and we're seeing this shift from the greed to the fear, and it's representing right there. Now, the index itself is still super, super, super greedy at 84.38. So looking at these two, we definitely see a divergence here, where the index itself is pushing one direction, where the average score of everybody in the index is pushing another direction. Let's go to the Nasdaq. Similar situation. The index itself, the Nasdaq, is pushing up higher and higher and higher, where everybody on average in the index is getting more and more fearful. So just be aware of that. Lastly, let's take a look at a few big stocks that are pumping right now, like Intel. Intel just got a sell signal literally yesterday on Monday, May 11th, in Outlier. INTC. I spelled that wrong. INTC. Here we go. In fact, let me change the view real quick and go back to INTC. INTC. Yeah, boy, that was a good sell signal, right? So it went up 150% from the buy signal, and then at the peak right there to today. So you could have got out yesterday, of course. So at the peak from now, it's down 7%. Now, am I saying it's going to crash? Is Outlier saying it's going to crash? No. But now is a great time to take all of those profits and go to Costco and just treat yourself. Just treat yourself, because this was a fantastic run, and it might be a great time to take those profits. How about Nvidia? Right. Buy signal came through, pushed up higher, sell signal came through, and that's where I had the trade and I got out. But Nvidia is pushing back higher once again. Fear and greed is still starting to turn around, hasn't really changed quite yet. So just be aware of that. If you are in Nvidia, it doesn't have all the momentum that it once had behind it. And then lastly, Micron. Micron still is sitting on that buy signal, pushing up higher and higher and higher. Let's go to Micron real quick. All right, so buy signal came through on April 13th to today. Looking at this to here, we're looking at an 81% gain, 81% gain on Micron, and it is still pushing up higher and higher and higher on the greed score. So just be aware of that. Micron is looking strong. Of those three, Micron definitely looks the strongest of the three, but of course, I wouldn't be buying it up here because there's a long way down, a ton of risk. Now listen, if this was useful to you, do me a favor and subscribe. Head over to OVTLYR.com, get your annual pass for just 82 cents a day. And if you're ready to save time, make money, and start winning with less risk, click one of these two, and we'll talk soon.